Thank you very much for joining me here today. I'm Don Ma. I appreciate you tuning in. To start off, I want to talk to you about this. It's something that doesn't get a lot of attention, but nevertheless is very important to talk about. Concerns are growing over cheap Chinese auto parts making their way to the U.S. from Mexico. There's calls now to block those imports. And let me explain to you why this is extremely significant to discuss. The Alliance for American Manufacturing is warning that Chinese-made parts could in fact threaten the livelihoods of American car companies and lead to plant closures and job losses for Americans. Now, the group believes China is trying to take advantage of a trade deal between the U.S. and Mexico, and this deal gives preferential treatment to vehicles and parts made in Mexico. Now, the renewed concern comes after China-based electric vehicle maker BYD announced plans to open an EV factory in Mexico. And the group is calling on the U.S. government to block the imports of low-cost Chinese autos and parts from Mexico. Meanwhile, Renault, a French company, and China-owned MG launched new electric cars in Europe at the Geneva Car Show on Monday. This is as Chinese automakers seek to take more market share from legacy European rivals. And this is also important, so let's take a look at this.
Renault is aiming to lead a European fight back against cheap Chinese EVs. At the Geneva Car Show on Monday, the French firm unveiled a new model that is meant to be among the most affordable electric vehicles. The Renault 5 evokes a big-selling model of the same name that was launched back in the 1970s. Base versions will be priced at around €25,000 or around $27,000. That should help them compete with an influx of low-priced Chinese EVs that have been grabbing market share. But Renault design boss Laurens van den Akker says it's not enough just to compete on price.
So with the new Renault 5, we're trying to capture the spirit of fun, of pleasure, fun to drive, 100% electric, a car that is really technologically advanced, makes a bridge with the past and shows you the future.
Renault scored a win over Chinese rivals when its Scenic EV took the prestigious Car of the Year title in Geneva. That saw it beat rival nominees including the Seal sedan, made by Chinese giant BYD. Even so, analysts say the fact that a Chinese firm was even in the running shows how far they have come. Automotive journalist Peter Segal says the price of EVs is a big issue.
So the main question around affordability of electric vehicles is the European Union's 2035 deadline, where automakers will only be able to sell zero-emission cars, which essentially means probably only electric vehicles. But the cost of the battery right now, EVs are unaffordable for a lot of European buyers, especially in Eastern and Southern European countries. And we see already that the rate of EV adoption in those countries is very low.
Monday saw Beijing-backed SAIC launch a new European model for its fast-growing MG brand. And the competition from Chinese firms is only going to grow. Industry experts at Innovev estimate automakers from the country will sell 1 million vehicles in Europe this year.
At the end of the day, in our industry, it's all about product.
Renault boss Luca De Meo says cooperation could be one response. He says car makers can join forces to emulate the success of European aerospace giant Airbus.
So on the topic of electric vehicles, sales of EVs in the U.S. hit a record 1 million for the first time last year. But electric vehicle sales aren't as sharply up as many had predicted, so future estimates for EVs have been lowered. In fact, Tesla and Ford have slashed their prices. Industry experts say the target market is now outside core EV enthusiasts, and there are a number of reasons drivers aren't ready to switch. They say the price for electric vehicles is much higher, and the substantial tax credits to offset the cost are confusing and complicated, which is an obstacle. But another hurdle for consumers to go electric is the lack of public charging stations. Now, let's talk a little bit about the relationship with Russia and China. Seems like there may be a bit of a hiccup within this relationship. Now, Russia is working to secure a loan from China, and it seems like so far the two sides have been unable to strike a deal. Russia has leaned into its relationship with China after Western countries heavily sanctioned Moscow over its invasion of Ukraine. And of course, this includes the European Union and G7 nations freezing more than $320 billion of Russian central bank assets. So Russia is trying to offset sanctions while balancing a huge increase in military spending. The latest round of loan talks between Russia and China took place last year at the end. And Russia's financial minister says so far no decision has been reached. Now onto markets. U.S. stocks ended with modest losses on Monday. The focus shifted to upcoming economic data, including January's personal consumption expenditures price index. Now, the Federal Reserve is preferred at looking at this inflation gauge. Here's a quick recap of markets.
U.S. stocks ended slightly lower on Monday after last week's AI-fueled rally, as the focus shifted to upcoming economic data that could affect the timing of the Federal Reserve's expected interest rate cut. The Dow finished marginally lower, the S&P 500 ended down almost 0.4%, while the Nasdaq ended down fractionally. Investors have turned their attention to the release of key inflation data due out Thursday, known as the Personal Consumption Expenditures Price Index. A reading for January that shows price pressures not cooling fast enough could further push back expectations of a Fed rate cut, says Carol Schleif, Chief Investment Officer at BMO Family Office.
The recent economic data definitely confirms that the Fed is not going to want to cut as soon as March. You saw CPI and PPI come in hotter than expected last week, and we'll get the PCE this week, which is the Fed's preferred inflation gauge, and the expectations are that it will show some heat as well. And so that most likely is going to keep the Fed on hold at least until late spring or early summer. There's been some conversation recently that the Fed may not be done raising. We think they are. We definitely think the Fed can stay on hold for some length of time, though. And our expectation had been for 3, maybe 4 cuts this year, but it will be pretty data dependent, especially in the next couple of weeks.
In AI-related stock news, shares of Alphabet fell 4.5% after the Google parent announced plans to relaunch its AI tool in the next few weeks. It was paused last week after inaccuracies in some historical depictions. Other movers included Warren Buffett's Berkshire Hathaway, which fell 2% after the U.S. government warned of a lawsuit against its power company, Pacificorp. And shares of Domino's Pizza jumped nearly 6% after the company beat Wall Street expectations for quarterly same-store sales.
And also big news, Walgreens is out and Amazon is in. The online retailer giant has officially joined the Dow Jones Industrial Average. Amazon joins Apple, JP Morgan Chase, and Coca-Cola in Wall Street's most respected stock index. S&P Dow Jones Indices, who manages the 30-company index, says Amazon ousting Walgreens reflects the evolving nature of the U.S. economy. Right now, Walgreens has the lowest stock price in the index, down nearly 70% in the past 5 years. And how do you feel about the U.S. economy? That's the core question behind the Consumer Confidence Index out today. But maybe the question should actually be, how do you feel about your grocery bill? Take a look at this.
The Consumer Confidence Index is out today, but a simpler measure of how Americans feel about the economy might be a trip to the supermarket.
Families still had to put food on the table in the face of a food price surge.
Wage growth isn't making up for historically high prices completely. A new report shows record U.S. credit card debt in the fourth quarter of last year. It's not as bad when adjusted for inflation, and that inflation is cooling. But in the meantime, Kellogg's is now advertising cereal as a dinner food.
If you think about the cost of cereal for a family versus what they might otherwise do, that's going to be much more affordable.
And with a lawsuit filed yesterday, the Federal Trade Commission is trying to block the largest supermarket merger in American history. Kroger and Albertsons say uniting would offset the cost of their unionized workforces. The FTC argues the deal would reduce competition and raise food prices. Its suit could be a follow-up to a campaign promise.
There are still too many corporations in America ripping people off. Price gouging, junk fees, greedflation, shrinkflation.
Meanwhile, Google has announced plans to relaunch its AI image tool after pausing the program for generating inaccurate images. Google's AI tool, Gemini, which can create images of people, was flagged by some users for historical images with inaccuracies. The tool, formerly known as Bard, was launched earlier this month to compete with rivals like Microsoft-backed OpenAI. Google said the tool was not working the way it intended, so it was taken offline to fix, and Google hopes to have it up and running again in the next few weeks. Budget carrier Ryanair will receive even fewer Boeing aircraft than previously anticipated, and this could lead the company to cut even more of its summer schedule. Here's more.
Ryanair may have to cut flights during its busy summer season this year, as troubled plane maker Boeing struggles to make deliveries on time. That's according to Ryanair CEO Michael O'Leary on Friday. He said Boeing originally told the Dublin-based airline they would receive 57 planes by the end of April. However, just over a week ago, the projection dropped to 50 by the end of June. O'Leary says the number could drop even further, and that, quote, if we only get 40, by the end of March, we will have to announce some minor schedule cuts. He was also sharply critical of the plane maker, repeating calls he has made before for Boeing management changes, and saying that Boeing has misled Ryanair about the severity of its crisis. Boeing has been entangled in a regulatory audit and prohibited from increasing production of its 737 MAX planes since January. That's when a panel blew out of a brand new Alaska Airlines MAX 9 when it was mid-air. In a statement to Reuters, Boeing confirmed that it had told some airlines that deliveries could be delayed as the company ensures planes meet all regulatory standards. Ryanair's stock has risen by a quarter over the past 2 years, making it the best-performing European airline in the post-pandemic travel boom. But further capacity constraints could make the carrier less competitive against low-cost rivals like EasyJet.
Meanwhile, shares of a private space exploration company have plummeted after the firm announced that a sideways moon landing has cut its mission short. The Houston-based Intuitive Machines explains that its lander, the Odysseus, came in too fast and one of its feet got caught, so the lander tumbled over. But despite that, Intuitive Machines is still the first private company to land on the moon in the U.S. since the 1970s, which sent its stock sky high on Friday. But gains were offset when the space firm announced that Odysseus mission would be cut short by a few days. Shares then fell more than 25%. Intuitive Machines says the lander will continue collecting data until sunlight stops reaching the solar panels, which the company expects to be today. The U.S. Federal Trade Commission in 8 states said they're suing to block supermarket chain Kroger's $24.6 billion deal to buy smaller rival Albertsons, saying it would boost grocery prices for millions of Americans. Here's the report.
U.S. supermarket chain Kroger's deal to buy smaller rival Albertsons may be on thin ice after the Federal Trade Commission in 8 states said Monday they are suing to block the deal. They say it could result in higher grocery bills for millions of Americans. The $24.6 billion deal would create a grocery empire with more than 4,000 stores and would strengthen Kroger's position as the second largest player in the U.S. grocery market behind Walmart. The merger has drawn scrutiny from lawmakers and consumer groups worried about price hikes, job losses, store closures, and fewer options for consumers. U.S. food prices have risen by 25% over the last 4 years. And while food inflation is showing signs of cooling off in 2024, grocery bills have become a growing concern for shoppers. The Biden administration has recently pressed for lower grocery prices and pushed back against big-ticket mergers that risk price hikes. After the FTC suit was announced, the White House said Biden believes large corporations must be checked by healthy competition. Shares of Kroger fell 2%, while Albertsons stock rose by over half a point. The deal spread, a measure of investor confidence in the merger, implies a less than 40% chance of the deal being completed.
And it's been 2 years since Russia invaded Ukraine. As Ukraine continues to fight, the country is looking to its Western partners, including the U.S., for critical aid. Ukraine's prime minister is hoping U.S. lawmakers will approve and send over long-awaited economic and military aid totaling $11.8 billion. Ukraine is also expecting 18 billion euros from the European Union's Ukraine facility, which was approved earlier this year. Are Kanye West's Yeezy shoes making a brief comeback? Well, let's hear more from NTD's Sean Marshall.
On Monday, Adidas announced a further release of Yeezy inventory with a range of existing products being available in phases over the coming weeks across the world. The range available will include some of the most popular designs, beginning with the 350 V2 in steel gray. The products will be exclusively available through Adidas digital platforms, including the confirmed app, Adidas app, and Adidas.com. Adidas ended its collaboration with the rapper and designer formerly known as Kanye West in October 2022 after a series of anti-Semitic remarks. In November, Adidas said that it had already garnered about $800 million in sales from 2 Yeezy product drops since May of last year, clearing out around 40% of the Yeezy inventory stored at various sites around the world, according to Bloomberg. Around that same time, Adidas also engaged in talks with retailers, consumers, and Jewish organizations such as the Anti-Defamation League. Earlier this month, Adidas said it will sell $270 million of the remaining Yeezy products, at least at cost, rather than writing them off. The company's initial earnings forecast for the year disappointed investors. Adidas is looking to fill some of the gap that Yeezy products used to fill. Sean Marshall, NTD News.
And Reddit said that its net loss narrowed to $90.8 million and revenue growth was roughly 21% in 2023. This is as the social media company made its IPO filing public in the run-up to its U.S. stock market debut in launch. Here's more.
Reddit made public its IPO filing on Thursday ahead of its much-anticipated stock market debut in March. It reported net losses narrowing to $90.8 million as revenue grew by roughly 21% in 2023. The IPO will be a major test for 2-decades-old Reddit, which lacks the commercial success of social media contemporaries like Facebook. However, Reddit has succeeded in building a loyal base among its message boards. It has over 100,000 active communities, 1 billion posts, and, in the fourth quarter of 2023, an average of 267.5 million weekly users. Reddit said its revenue growth in the year to December 2023 was $804 million, up from over $666 million a year earlier. Reuters reported on Wednesday that the company has struck a deal with Google to make its content available to train the search engine giant's artificial intelligence models. According to sources, the contract's worth about $60 million each year. Reddit was valued at $10 billion in a funding round in 2021. Its IPO valuation is uncertain as yet, but the company is expected to seek a sale of nearly 10% of its shares.
And Puma today said it expects a weak first half of the year in a challenging market for sportswear, but shares in the German sportswear brand climbed as it kept its dividend and stuck to the annual targets it set in January. Here are the details.
Puma is warning of tough times ahead as inflation takes a toll on shoppers. The German sportswear giant said Tuesday that it expects a weak first half of the year. Boss Arne Freund described market conditions as challenging. In a surprise to analysts, Puma said it saw sales fall in all regions except the Asia-Pacific over the fourth quarter. A strong performance in China and India drove the gains there. Shares in the firm rose despite the downbeat outlook, however, up around 0.5% in early trade. Investors were cheered by Puma's decision to maintain its dividend at previous levels. The company also stuck to annual targets it set back in January. The firm is expecting sales to grow by a mid-single-digit percentage. Like bigger rivals Nike and Adidas, Puma is facing headwinds from inflation, which has consumers cutting back on non-essential purchases. That's left the sports brand grappling with a mountain of unsold stock. However, Puma said it did manage to cut its inventories over recent months.
And finally, Bitcoin hit a 2-year high on Tuesday on signs of large players buying the cryptocurrency, while smaller rival Ether topped $3,200 for the first time since 2022. Here are the details.
Bitcoin hit a 2-year high on Tuesday. It rose to more than $57,000 on signs of large players buying the cryptocurrency. Bitcoin has rallied over 1/10 in 2 sessions. Investors were alerted by Monday's disclosure from leading crypto investor MicroStrategy it had bought 3,000 Bitcoins, spending $155 million to do so. The largest cryptocurrency by market value has also seen further excitement recently. Buyers were drawn to it after US regulators approved Bitcoin-owning exchange-traded funds, or ETFs. Smaller rival Ether is also on the up, topping $3,200 for the first time in 2 years on Tuesday. Another big draw right now is the Bitcoin halving event in April. This process is designed to slow the release of Bitcoin by cutting the reward for producing the tokens in half. The cryptocurrency has gained around 32% in value so far this month and attracted big hitters. Social media site Reddit said it had invested a small portion of its excess cash reserves in both Bitcoin and Ether.
And thank you for watching NTD Business. That's all the stories we have today. See you soon.